Hello, it's Shoe Dog Charts. When I woke up this morning, I had a completely different plan for you today. However, I read three different news articles. In one, a big question for me was answered, a question that I posed to you a few videos ago. And number two, there's an interesting chart with regard to the current valuation that I think you'll find insightful. And then lastly, we're going to talk about Warren Buffett. So let's take a look. Do you remember this picture of Ray Dalio? He owns Bridgewater, which is the largest hedge fund in the world with about $160 billion in assets. And last week he was in Davos, Switzerland, and made two statements that were somewhat confusing to me. In his first statement, he said that it would be stupid to be holding cash. And then later on in the same interview, he said that he was expecting the largest bear market in bonds since the 1980-81 bear market. And those two concepts to me were contradictory. How could you want somebody to put their cash into the market and at the same time have a bear bond market? And then we spent a few days talking about bonds. And so hopefully you understand that contradiction. Well, it wasn't a contradiction, and this morning I have my answer. According to Bloomberg, the world's largest hedge fund tripled its bearish wagers against Italian companies in the last 3 months, mainly focused on the financial sector. Bridgewater boosted its bearish bets against Italian companies to $3 billion, up from $713 million in early October. In addition to shorting 5 banks and 1 insurer, public filings disclosed that the $160 billion hedge fund was also betting on a decline in the stock price of the world's largest cable maker, as well as shorting Italian mega banks and an insurer. And these make the short position the largest short position carried by the world's biggest hedge fund in years, if not ever. So, what he was talking about with regard to don't hold cash because you're going to be stupid, he's using it in the market, but he's not going long. He has a huge short position in the market. Now, I'm not recommending you or I go short in the current market, but at least it answers the question. And now I do not see his two statements as contradictory. He just has more flexibility, and he's just a lot smarter than I am. Let's go to the next chart. And this chart here, which shows the NYSE net new lows, which were greater than 7% of the issues traded, and compared with the S&P 500 that closed less than 3% from a 52-week high. And this week we saw 271 stocks on the NYSE close at 52-week lows versus just 44 new highs. And that net difference of 227 more new lows than new highs represented 7.4% of all stocks traded on the NYSE. And if you think that sounds like a lot, you're right, it is a lot. And this chart shows that since 1970, the S&P 500 has closed within 2% of its 52-week high on more than 4,500 days. And this week, this is just the 15th time on such days that the number of net new lows totaled more than 7% of all stocks traded on the NYSE. And glancing at the chart, it's apparent that several of the previous occurrences came at rather interesting periods, including the near cycle tops in 1972, the year 2000, and the year 2007. However, there were also times in the past half decade that didn't inflict much, if any, damage on the market. So, is this condition really something to worry about? Well, let's not worry. Let's just keep our eye on it. Let's now go and take a look at Warren Buffett. And now just a little lesson from Warren Buffett and Berkshire Hathaway. And if you've been reading the news, Berkshire Hathaway has a whole bunch of cash, probably more cash than Berkshire Hathaway has ever had. And so people are trying to figure out, what will Warren Buffett do with all the cash? And this morning, UBS came out and indicated that they think that Warren Buffett and Berkshire Hathaway should make a big acquisition, one that could exceed maybe $160 billion. And UBS arrived at that figure by factoring in the record $109 billion of cash that Berkshire actually has on hand and combined it with the company's free cash flow. So that's how they come up with $160 billion. So as for which industry Berkshire may pursue, UBS thinks that utilities are a good bet because, after all, the company, Berkshire Hathaway, its energy unit made an unsuccessful offer for the electricity provider Encore last year, and Berkshire may still be interested in that energy sector. There's one possible impediment to all of that, which is that equities right now, the stock market, is trading at historically high valuations, and this could make some potential targets prohibitively expensive. And so, with that said, Berkshire's own high valuation could prevent it from using its cash to buy back its own shares. So that makes it even more likely that Berkshire Hathaway will use its capital on something other than a buyback, but he's going to bide his time. So today we just need to take a quick lesson from Warren Buffett and keep stacking that cash, because an opportunity is going to come around the corner. And when it does, you'll want to be ready to take advantage. So for today, that's Chew Dog Charts. Thank you.